Talking about the state of commercial real estate with some experts. We have Howard Michaels. He is the chairman of Carlton Advisory Services, and Joe Korbar. He's managing director of Carlton Advisory Services. Joe, talk about the $400 million worth of real estate. It's commercial as well as residential that is available online for people who want to bid on this real estate. Tell us about it.
Absolutely, Pimm. It's a fantastic opportunity for investors to get well-placed assets. There's roughly 30% of the pool is REO. Bid now.
Real estate owned.
Real estate owned.
By banks.
By banks. Actually, well-placed. There's office. There's commercial. There's $130 million in multifamily. Most of the assets have receivers in place. Clearly, they're well-maintained, located in Jacksonville, Miami, Fort Lauderdale.
It seemed a little bit like a poster for Florida, I got to say, when I looked up all the real estate. Why is that? Why is most of the real estate that's available online coming from Florida?
Well, is there... If I can interject,
yeah, please, Howard.
We're Joe's handling the $400 million sale and a couple of other sales, but we're actually, the Carlton Exchange is selling over $1 billion of Florida real estate right now. $1 billion in, so basically a good part of the state is being.
Well, that's what I was thinking. I mean, it was almost as like half the state is available online.
We have a $400 million portfolio. We have a $300 million portfolio. We're launching tomorrow a $150 million, and then next week another $150 million. All regional and community banks that are looking to get these toxic and distressed loan and REO assets off their books.
Is there any estimate, and I know that property is, very specific, so you've got to go, building by building, shopping center by shopping center. Is there any estimate in your mind what the discount is? Not necessarily.
You always want to know what the price is.
Well, I always want to know what the price is. Is there any idea as to the discount, not necessarily to the stated price, but to what the banks were carrying this stuff on?
Let me answer it like this. Number one, you're 100% correct that each asset is different. A fully occupied multifamily apartment building, which qualifies for Freddie and Fannie financing, is going to trade better than a piece of vacant land where it's hard to get financing. So we can't really generalize. But Wells Fargo just came out with a study, and they said over the last 6 months that they've traded assets with a 60% loss severity. So that means they're basically recovering 40+ cents. So on pure non-performing loans where you don't have a lot of income, there's an expectation that things are going to trade in that range. But, as Joe pointed out, we have some very high-quality assets. We've got some condo projects which are fully complete, and you're just buying the unsold units in what otherwise would be a successful condominium project. And we have multifamily properties that qualify for Fannie and Freddie financing. And then we have office buildings, which are partially
You've got conference centers that are available as well.
On one of the properties, we have 3 championship golf courses, and we have a 140,000 square foot conference center, which is perfect for an adult home or some kind of spa, health, wealth kind of center. So, for entrepreneurial investors, for people who are well capitalized, there's tremendous opportunities right now in the loan sale area.
Now, one of the things I noted, Joe, about a lot of the properties is shopping centers. Is this a situation where shopping centers are going to be sort of the poster child for commercial real estate? We haven't seen a lot of those transactions. Is this just going to be more and more shopping center sales?
I think so. In this pool, for example, there's roughly $50 million worth of value in shopping centers. From small strip malls to even large, we have actually a 55,000 square foot shopping center, all fully leased up, occupied in obviously well-traveled highways, located around residential communities. The issue was, in the boom, there was a lot of leverage that was going out, and obviously buying more with less, and obviously things with the economic downturn had a big impact. Doesn't necessarily mean that the real estate is stressed. It's not.
All right.